aspects featured in the ASK. 1, the good GST practices. 2, pre-filing checklist. 3, ASK annual review. The focus of these 3 key aspects are putting in place good GST practices covering people record keeping, systems, internal controls, risk management to handle the GST reporting of business transactions. Self-assessment using the pre-filing checklist to ensure that the GST returns are correct before submission of GST returns, and performing annual review of past GST returns to detect errors early and to avoid costly penalties. These 3 sections are designed with specific usage and users in mind. So assuming that you are a GST registered business, who are the ideal users for each of the sections? So for businesses who are planning to register for GST or are newly GST registered, it is recommended that you run through section 1 to ensure that all necessary internal controls are in place for GST reporting. For section 2, on pre-filing checklist, it is recommended for business filing their first GST return or has new business arrangement or a change in GST personnel. Finally, the section 3 annual review applies to all GST registered business to perform regular review of past GST return. So visually, this is how the entire ASK would be adopted. Businesses can implement each section individually or put all 3 sections in place. So when should business adopt ASK? So the ASK templates and worksheets are available at IRAS website. You may adopt ASK either voluntarily or be required to do ASK as part of the qualifying conditions of the various GST schemes as shown. Do note that for businesses who are required to conduct ASK to meet the qualifying requirements for application or renewal of the relevant GST schemes, it must conduct Section 3 of ASK annual review, whereas Section 1, good GST practices, and Section 2, pre-filing checklists are strongly encouraged but not compulsory. So when ASK is conducted voluntarily by the business GST or accounting staff or external tax advisory firms would be the most suitable personnel to perform the ASK review. Do bear in mind that ASK annual review is compulsory, even if you are currently approved under these schemes and looking to renew your approval status. Okay, so who can conduct the ASK review? There are 2 different roles to assign when you conduct an ASK annual review. First, the person who conducts the review itself, and second, it's the person who certifies the review. For application or renewal of GST schemes, the ASK review must either be performed by an individual accredited with the Singapore Chartered Tax Professions, SCTP, as ATA GST or ATP GST. Alternatively, the ASK annual review can be performed by the GST registered business and certified by an ATA GST or ATP GST, adhering to the certification procedures set out in the ASK annual review guide. This individual or the one who certified the ASK review may be an in-house GST personnel or accounting staff or external tax advisory firm staff who attain the accreditation. So in essence, there are three various arrangements to perform the ASK annual review. Arrangement 1, the review is conducted by GST registered business who assigns the role to their own GST personnel or accounting staff. Arrangement 2, the review is conducted by an in-house or external ATA GST or ATP GST, such as your tax agent. Arrangement 3, the review is performed by the GST registered business and certified by external ATA or ATP GST. So to meet the requirements for application renewal of the schemes, you will have to adopt arrangement 2 or 3. Okay, so for GST registered businesses which adopt ASK, it will enjoy the following benefits. You'll be able to understand the GST requirements on filing and record keeping. You'll be able to ensure accuracy of GST submissions. You will reduce risk of incurring penalties on errors made. Discover past GST errors early for timely disclosure to IRAS, and enjoy zero or reduced penalties under IRAS voluntary disclosure program, which we call it VDP in short. And I will share more about VDP in my next slide. Enjoy administrative concessions for common errors disclosed in the course of ASK annual review. For this, I'd like to highlight that in order to provide greater transparency and certainty to business, IRAS has put together a list of administrative concessions for common errors disclosed through ASK review in our website. For errors published, there is no need to seek for controller's approval to enjoy any of this administrative concession. Instead, businesses are to self-assess if their errors fall within the scenarios described and the conditions, if specifically mentioned, are satisfied before adopting the administrative concessions. So for details, you may refer to paragraph 5.2 of the section step 5, quantify your errors, if any, and submit your findings to IRAS for review. And last benefit but not least, you will fulfill the requirement for application or renewal of the specific GST schemes. So what exactly is VDP? So this is actually a program that is in place to encourage taxpayers to voluntarily disclose their errors to IRAS in a timely manner. So under this program, IRAS is prepared to reduce the penalties for the errors made if the qualifying conditions are met. So in general, the businesses may enjoy waiver of penalties if they disclose errors up to 12 months on per return basis. If businesses adopt the ASK annual review, where the basis period is covering 12 months, they may enjoy longer grace period for the disclosure of errors. We will explain this further in the next couple of slides. The next question again will be, what do we mean by reduced penalties? So we will specifically, IRAS will waive the 5% late payment penalties if businesses undertake the ASK annual review to voluntarily disclose past errors within 1 year from the statutory filing date of their GST return in respect of the financial year or the 12 months period selected for review. For voluntary disclosures made after the 1 year grace period, IRAS will impose a reduced penalty of 5% of tax undercharge if the conditions under the VDP are met. Maybe I want to just highlight one more thing when we actually explain that what is the statutory filing date of the last GST return. This means that the the filing due date for the GST return of your GST Form 5. So moving ahead, so if we talk about the benefit for businesses that adopt ASK review, it will be that they will qualify for waivers for all the periods covered by the 12-month period if they satisfy the conditions. And to ease business review, IRAS recommends that the ASK annual review is conducted based on their financial year. Now, let's look at this example on how VDP works with ASK annual review. In this example, ABC Private Limited's financial year ends 31st, and he files quarterly GST returns ending March, June, September, and December. ABC decides to conduct the ASK annual review for the financial year ending December 2019, and there are 4 returns covered in this FY, with the last return covering October 2019 to December 2019. This is how we determine the grace period to qualify for waiver of penalties. The statutory filing deadline for the last return ending December 2019 is 31st January 2020. The last day of the grace period to qualify for waiver under VDP is 1 year later, which is 31st January 2021. So under scenario 1, ABC disclosed the errors found in ASK annual review to IRAS on 30th of June 2020, which is within the grace period of 1 year. Hence, for errors occurring from 1st January 2019 onwards, 5% penalties will be waived. This means that 5% penalties on the errors will be waived for 5 quarterly GST returns covering from 1st January 2019 to 31st March 2020. For all errors occurring for the period before 1st January 2019, reduced penalty of 5% will still apply. So let's see what happens when ABC missed the grace period and filed his disclosure on 31st March 2020, which is after the grace period under scenario 2. The result is that ABC will not be able to benefit from the longer grace period. Waiver of penalties will be considered on per return basis, which means that penalties will be waived only for returns covering the period from 1st January 2020 onwards, 1 return within 12 months from the date of disclosure. Reduced 5% late payment penalties will apply for periods before 1st January 2020. From this illustration, scenario 1 shows how you can benefit by getting waiver for longer period than the 12 months grace period accorded by the accounting period if you choose to disclose the findings on a timely basis. Now, we have gone through the introduction of ASK, its purposes, benefits, how VDP applies for ASK. This is an overview of the ASK methodology that we will be covering in the subsequent slides. And they are categorized under the 3 sections that we have highlighted earlier. Section 1, GST practices. Section 2, pre-filing checklist. Section 3, ASK annual review. So these slides will show you the breakdowns of the different areas that covers under each of this section. Next, we will zoom into each section of the ASK, beginning with section 1, good GST practices. Section 1 is about GST practices and is an interactive questionnaire with score and review function. The questionnaire is designed to help you assess the adequacy of your business internal GST processes and will take 15 to 20 minutes to complete. Section 1 basically covers 4 modules on people, record keeping, internal controls, and system. People refers to the knowledge and competency of GST personnel in the business. Record keeping refers to the complete documentation that supports GST declarations, GST worksheets. Internal controls covers the GST treatment. Second level of review, and system refers to the accounting systems that collate information, record keeping for GST reporting. Okay. So each module consists of a set of essential requirements and good practices. The essential requirements are the minimum requirements that a GST registered business is expected to adopt, while good practices are the additional practices that businesses are strongly encouraged to put in place. A GST registered business is expected to adopt all, or rather 100% of the essential requirements. If your business is already achieving this, you can work towards putting in place good practices that are currently not present. We will now run through some of the relevant pages that you will see when completing Section 1 of GST practices. The first page of the worksheet contains the instructions for Section 1 questionnaire. After reading the introduction and note to user, you can click Next, the next button to continue. Okay. On the second page, you will be able to click on either of the 4 modules that I've shared earlier. It will bring you to the corresponding essential requirements that the business must adopt and good practices which businesses are strongly encouraged to put in place. For the purpose of this exercise and today's presentation, we will select record keeping module to illustrate. Under Section 1, there is a scoring table for reference. Do note that the score results is determined by the number of GST practices currently adopted by the business. The business should use the score results as a gauge to improve its current practices. We will be sharing more on this in the next few slides later. And at the bottom of this page, you will also need to complete the business details accordingly in the yellow boxes, as well as indicate the period under review. Upon completion of these fields, you can again click the Start button to continue. So these are the first 2 questions in GST practices that you will have to answer. Okay, first, my business appoints a GST return preparer and a separate GST approver to review the work done by the GST return preparer. 2, my business imports goods with GST suspended or deferred, or import on behalf of overseas principal. So you will answer yes or no according to the business arrangements and scenarios. Then you select one of the modules. In this case, the record keeping is being selected to begin the questionnaire. You can then click Next button at the bottom of the page to continue. So let's go through the first few questions under this record keeping module. On this page, you can click on the box on the leftmost column if you fulfill the essential requirement or good practice. You can see whether it is an essential requirement or good practice. Red font represents the essential requirement, while the good practices are in black font. After going through the questions on the page, you can click Next to continue with the other questions under the record keeping module. The last question under record keeping module is on whether your business maintains the sales and purchases listing in accordance with the following format prescribed by IRAS. You will find that most of the details such as invoice date, invoice number, name of customer, invoice amount would have already been catered for in your own accounting invoicing system. The additional information that is required in purchase listing is the GST registration number of the supplier. This information is crucial as it is to ensure that the input tax claim is valid and supported by a tax invoice, which would then have the GST registration number of the supplier. Under the record keeping module, there is only one question on good practices, and that is whether you keep electronic records instead of hard copy for easy storage and retrieval. So you can click answer the questions, click next when you are done, and you'll be taken to the next module to be completed. You will then repeat the process of answering the relevant questions for all the other modules. Do note that if you do not fulfill any of the requirements or practices, or do not have such scenarios, you will have to check the box under none of the above at the bottom of the page and click next. Otherwise, you will not be able to proceed to the next page. Okay, so once you have completed all the modules, you will be brought to the assessment page. So this is a graphical representation of how the business has scored in GST practices internally. So it's a kind of sensing for you to know whether is the company doing well in terms of adopting these good GST practices. So you can click back to amend any incorrect inputs. Otherwise, proceed to review the improvement areas if there's any. That has been highlighted in this score sheet, and input the follow-up actions required, if any given. So in the review page, as shown in this example under People's module, the corresponding questions attempted and the record of your input will be shown here. So as a summary, so this can be kept as a reference for the business, and it can be saved as a document, as an Excel file for record keeping. For ease of reading, do note that for the areas highlighted in yellow are those identified areas that needs improvement. In this example, the GST approver doesn't have accounting qualifications or have no experience in reviewing GST returns. The business should then take additional steps to ensure that the GST approver understands how accounting transactions translate into GST reporting. As good practice, it is also assuring if your GST approver is an ATP or ATA with SCTP. You can continue to scroll down and check through which other areas need improvement and work on them progressively to attain higher score ultimately by adopting the recommended good practices. Next, we will cover section 2 on the pre-filing checklist. Section 2 is a pre-filing checklist that helps you to perform a QC check on your GST declarations before filing the GST returns. Through a series of questions and answers, the checklist will help you to check on the respective transactions and GST treatment that will affect your GST declarations. So there are 8 separate sub-checklists within this section, which helps business to understand the appropriate GST treatments for their business transactions. The sub-checklists have been broadly categorized to facilitate the required fields that is to be declared in the GST returns. So this will help businesses to ensure completeness and accuracy of their GST returns before submission to IRAS. You will only need to complete the checklists that are relevant in your business, and each checklist takes about 20 minutes to complete. Do not submit the completed checklist to IRAS. However, you should retain a soft copy of the checklist for reference. Again, printing is not advisable as it runs into many pages. To start, fill in your business details and the period of the GST return that you are checking. Let's run through a sample checklist. Suppose I want to check the GST declarations for Q1 of 2020 before submitting to IRAS. I will complete the details as shown. So as I mentioned, these are the 8 sub-checklists that's available. And to begin your review, click on the relevant pre-filing checklist on the item you want to check on the dashboard. Do note that the checklist goods imported under MES, A3PL, IGDS, other approved schemes are only to be completed by businesses who are under these schemes. So if your business is not under any of these schemes listed, you do not need to complete this checklist. Similarly, if your business does not make any zero-rated supplies or have any imported services or digital services, you can skip the relevant sub-checklist. So even though we are saying you can also use this checklist if you are planning to make zero-rated supplies, and you actually can run through this checklist to really look at what are the relevant questions or situation that you might actually encounter. So for this illustration, I will run through the sub-checklist, zero-rated supply shaded in green, which is box 2 of the GST returns as highlighted in green here. Upon clicking the green box, you will come to this page and you can proceed to answer the questions listed by selecting yes, no, not applicable. So once the selection is done, there may be relevant responses populated in the corresponding colored box below, as with serial number 2 here. Do read through all the additional information populated as a result for the answers. This is an example of one question where we have provided additional advice due to the answer selected. The question asks that you do a review of the listing provided based on the data extract from the source documents and whether the month-end cutoff date for the last transaction fall on the last date of the GST prescribed accounting period. So as the answer indicated here is no, the additional information populated advise that you should ensure that there is no omission of sales, or whether is it a case where whether there's a case of early reporting of the sales. So, or even it could be a situation where the company's financial year end does not fall on the last day of the month. So for this, do note that the company should write in to inform and request for a special accounting period for its GST filing purposes. In another question, where the sales of goods has been zero rated, but the delivery of goods was to another local address other than the freight forwarders, the additional information advised that the sales cannot be zero rated and should be standard rated with GST charge. For such cases, output tax should then be accounted for accordingly in the GST return. So as I've shared earlier, Section 2 is a pre-filing checklist that is highly recommended for a business filing their first GST return or has new business arrangement or a change in GST personnel. So assuming that the business has completed this checklist before submission of the GST return and has standard rated the said suppliers advice, there would not be any errors made in the GST return. The business would also be able to relook at all its similar business arrangement and be mindful when deciding if the sales transaction can be zero rated for GST purposes moving forward. Similarly, in this question, where it asks if all the supporting documents have been maintained, if the answer selected is a no, zero rating of the sales cannot be applied. And again, GST has to be accounted and reported as output tax in the GST return. Hence, it is important to pay attention to the additional information and the remarks populated due to the answer selected. Again, I'd like to emphasize that it is important for businesses to maintain all relevant supporting documents for all its business transactions. So do note that IRAS may also request for supporting documents for verification during its audit review, and in absence of it, IRAS may impose additional tax and or penalties. Hence, we hope that through ASK, businesses are aware of such requirements and put in place processes, controls to ensure that there are good record-keeping practices. Okay. For this question, if the total zero-rated supplies shown on the listing does not tally with box 2 of the GST return, the auto-populated additional information will advise you to check and reconcile the differences. This is to ensure that the GST declarations are complete and accurate. Do note that when you come to the last question, you can either click on back button for you to review some of the questions already attempted, or main menu button to return to the dashboard at the bottom of the page. So due to alignment issue, the two mentioned buttons are not shown on these slides, but it should actually appear somewhere at the bottom. Upon clicking on the main menu button, you will return to this dashboard page. Your completed checklist will be shaded in a lighter tone, and the title will have the words completed. That you can then select another pre-filing checklist item and perform the relevant steps 2 to 4 again. Once you have completed your review of the relevant pre-filing checklist, you are encouraged to retain a soft copy of the document by saving the file. Printing is not advisable as it can run too many pages. And these slides marks the end of the presentation for section 1 and section 2 of ASK. I hope by now you will have a better understanding of why ASK is a useful tool for self-review and what are the initial preparations needed to ensure that your system and processes are in place to minimize risk of filing incorrect GST returns. For the next section, I will now hand over to Yvonne, who will take you through the steps on how to conduct the ASK review covered under section 3.
Siew Lee?
Yes.
Can I ask, ASK review is the annual review, is it? You have another one called something, A something. It's like once you have that, then those people who actually opt for MES status or ACMT status. Yes, ACAP.
Okay, if you're talking about the GST schemes, if you're talking about the GST schemes, right? Yes, it's the same ASK annual review status, ASK annual review that should be completed. And this is actually one of the required requirements for the scheme.
Is ASK plus ACAP skill or ASK or ACAP?
ACAP,
approved contract. AC what?
Okay.
ACC.
Okay, will you be okay? Will you be able to, okay, because the presentation is still ongoing now, can you actually key in the ACAP, ACAP? Are you talking about ACAP, is it? Okay, this is a totally, this is another different scheme. This is under another arrangement. So it's actually ASK will, okay, usually ACAP will also tap on to ASK annual review, but basically it's the same review that we are talking about, but just that ACAP, we call it ACAP, will actually comprises of even more things lah. There's a lot more other information that we actually need looking through the controls in place and everything, because I think this is in essence something like we promise, or rather we commit that we will not perform any audit review for a period of time. Yeah. So if this is your
companies
question,
so yeah, for companies who are seeking certain status like MES status or
right,
continue renewing their MES status, they have to go through the ASK, then ACAP.
No, it's a different thing. So if you are talking about for companies who is going through MES schemes,
Yes.
schemes and other schemes like I was mentioning A3PL and all, ASK annual review should suffice. So ACAP comes as an additional one only if you are applying to how should I say? I wouldn't say avoid, but applying to say that, look, I mean, I have good controls in place, I have good record keepings and everything. So could you promise not to conduct an audit review for at least for the X number of years or something? So this ACAP is under another section. So if you're talking purely just about the MES and the other schemes, usually what we actually ask for is only the ASK annual review.
Okay.
That's the minimum. That's the minimum to be covered. Yeah, that's the minimum review that should have been done.
Okay, Angela, thank you for your questions. Okay, we will, if you have further clarifications, right? We will try to address it at Q&A segment. Okay, right. Okay, Siew Lee, back to you.
Yeah, okay. So I'll say thanks, Joycelyn. So maybe we keep the questions to the Q&A sessions later. Otherwise, you could still go ahead and type in the chat box, and we will actually help to address them from there as well. Just remember to address the chat box to everyone. All right.
Thanks, Yuli.
Yeah, hi, good afternoon, everyone. I'll take over from Siew Lee. Thank you, Siew Lee. Okay, maybe just let me provide the website link since Angela was asking about ACAP versus ASK earlier on. Okay, I have posted the link that we have actually done a comparison on our website. So maybe y'all can click on it and read up on what are the voluntary compliance initiatives that IRAS has. Okay, so without further ado, let me share my slides. Okay. Okay, Ken. So I'll be bringing through all of you through section 3 of the ASK annual review, which by using a case study. So without further delay, shall we begin? Okay, ASK annual review is conducted on your GST returns filed in each financial year. Basically, there are 5 steps to follow. Step 1 will require you to review the GST declarations that you have made in the past financial year and to ensure that they are consistent with your business cycle. Step 2 will require you to select the GST return for a detailed review based on the predetermined criteria. Step 3 is to perform certain checks for the selected GST return that you have selected in step 2. The checks must cover each box declared in your GST return using the templates which are available in our website. For the purpose of this presentation, I'll be going through 2 templates basically step 3B, which is template 3 for zero rated supplies, and step 3D, template 6 for taxable purchases and input tax claims. Then we will proceed to step 4, which is to review and compare your financial statements against your GST declarations for the same financial year. Lastly, you will then need to submit your findings and quantify the errors discovered in the course of your review, if there is any. Okay, before starting on the ASK annual review, there are certain documents and information that you will need to prepare. On our website, download the latest copy of the e-tax guide on GST ASK annual review, the working templates, declaration form and disclosure of error template. At your end, you will need to prepare sales and purchase listings, accounting records and documents supporting all GST declarations. Supporting documents would include tax invoices, credit or debit notes, export permits, subcert, import permit, inward summary report, or any other transport documents such as bill of lading, airway bill. And if you are under the tourist refund scheme, you will need to have the documents in relation to the scheme. Your financial statements or management account for the year under review. So let's take a look at this company, ABC Private Limited, to run through the annual review. ABC Private Limited manufactures special chemical for supply to local industries and also export to overseas countries. Other than exporting and selling of chemicals, they also provide lab testing and management services to their overseas subsidiary, XYZ Limited. ABC is under the quarterly filing cycle, and they actually submit their GST returns on March, June, September, and December, based on the March, June, September, December quarter. So step 1 of the ASK annual review is to review the GST declarations filed in the past financial year. In this step, there are essentially 4 key checks that you will need to perform. The first check is whether there are any major fluctuations in your supplies and purchases in the last 12-month period. Generally, major fluctuations could be easily explained by the normal peaks and troughs of your business cycle, or perhaps due to a significant change to your business. For example, for business in the retail industry, the closing of a particular branch or the stopping the sales of a particular product, or the opening of a new branch, that will actually impact the sales value, the sales figure. So if there are any fluctuations which cannot be easily explained, the company should conduct further investigation to assess if there is any error made in the GST declarations. The second check to perform is whether your declared output tax, which is the output tax declared in the GST return, is less than your computed output tax. What do we mean by computed output tax? It's basically 7% multiplied by the standard rated supplies declared in box 1 of the GST return. So usually we would not expect these two figures to differ greatly from each other. However, if the difference is more than 10,000 for each accounting period, you should attempt to explain and reconcile the differences, as this may indicate an error in your output tax and standard rated supplies. Likewise, you should also be checking on the declared input tax, which is the input tax declared in your GST return, against the computed input tax, which is 7% multiplied by your taxable purchases. If the difference between the two is more than 10,000, it could indicate an error for the input tax claim for the particular return. Finally, you should also compare your taxable purchases over your taxable total supplies declared. This is what we usually refer to as the TPTS ratio. We will generally expect this figure to be less than 1 for a normal viable profit-making businesses, because your purchases are expected to be less than your supplies. However, if the TPTS ratio is more than 1.2, you should evaluate if this trend is reasonable and explain why. For example, your business may have bought a new property, a new equipment, or a new asset that causes your purchases to shoot up, and hence make substantial input tax claims for that particular quarter. To begin, you will need to retrieve all the GST returns done for the year. To do this, there are several ways. I'm sure businesses would retain all the GST figures in soft copies when you all submit the GST returns for each and every quarter. So these soft copies could be in a form of PDF, could be in a form of Excel spreadsheet. To transfer these figures into the template that we use for this ASK annual review, manual transfer may sometimes result in errors when you key in the numbers. So you can actually make use of our e-service in our tax portal to retrieve the past GST returns. Log into the My Tax portal, click on Goods and Services tax, the menu. There's actually one menu that you can that is specifically for this ASK review, which is to retrieve GST returns and assessment for ASK review. So you just need to click on that selection and then enter the period that you're going to review, and you click on Retrieve. The F5 data for the selected period that you have keyed in will be displayed in a tabulated form per what you see on screen. So what you need to do is to select the whole area, copy and paste into the step 1 of the template 1, which I will show you later to help you to begin on the ASK annual review. So with these e-services, it actually helps to save your time and reduces the risk of data entry if you extract from your F5 manually and keying in the numbers manually into template 1. So here is how your template 1 will look like after you have pasted the information over the box area. So you can see that I have actually pointed to this portion of the template 1. There's actually inbuilt formula to calculate the output tax, input tax variance, the TPTS ratio. So there is actually no need for you to purposely remember the formula to use in order for you to do the checks. Once you have pasted the values at the top of the template, all these figures would actually be auto-populated. So if you notice, right, in our template, in our ASK templates, all of them, they are actually yellow shaded cells and white color cells. So all those in yellow cells are those cells that you are supposed to type in the figures and information. All those that are not colored, right, that means it's white background with the inbuilt formula. So try not to change the formula so that you're working on the correct figures to do the review. Okay, so the first step is to check for any major fluctuations in the year. So we can see ABC reported a sharp increase in box 1 for the period ended 30th June 2020. This is because ABC Private Limited has sold a commercial property of 450,000 during this period. So if we isolate this particular sale, the standard rated supplies made during the period would be about 147,000, which is quite in line with the standard rated supplies of the other 3 periods. And we also noticed a sharp increase in box 5 of the period ended 30th September 2020. This is due to a purchase of equipment of 150,000. So again, if we isolate this purchase, the taxable purchases made during the period will only be 103,000, which is quite close to the taxable purchases of the other 3 periods. So for both the above findings, ABC would put in its explanation under the findings and explanation area, this part. The next two steps would be to check the declared output text versus the computer output text, and declared input text versus computer input text. So like I was explaining earlier on, our templates had inbuilt formulas to calculate the difference between the declared and computed texts. So we see a negative difference of 31,500 for the period ended 30th June 2020. Means to say that the output text declared by ABC is 31,500 lower than what is expected. If we regross 31,500 by 7%, the answer is 450,000. So what does it mean? It means that ABC could have potentially under-accounted its taxable supplies by 450,000 and output tax by 31,500. Hence, ABC will need to investigate and explain why. So this 450,000 is exactly what we mentioned earlier on, that they have actually sold the commercial property in that same period. So ABC will record this finding in the findings and evaluation area. Likewise, they should perform the same check for any input tax discrepancy. In this case, although there's a difference noted for 30th September 2020, but because it's below the threshold of 10,000, there is actually no need to furnish any reasons for the differences. But as a good practice, ABC has recorded their findings that the discrepancy is due to zero-rated purchases. Include relevant supplies received by you subject to customer accounting. However, as these are not your own supplies, they are to be excluded from the value of your taxable supplies and total supplies. So for this, you will need to manually compute, because when you report for the GST-F5, you would have included this. And when you copy and paste over from the data in tax portal, when you retrieve it, the figures would have included the customer accounting figures. So separately, you will need to do some manual adjustment. And likewise, with effect from 1st Jan 2020, the value of total supplies reported, you will also need to manually adjust to exclude the value of imported services subject to reverse charge, the value of digital services supplied by an electronic marketplace operator on behalf of underlying suppliers under the overseas vendor registration regime, as these are not your own supplies. So after you have done this manual adjustment, and if the ratio is more than 1.2, then you will need to provide explanation. In the case for ABC, the high TPTS ratio was noted for the period ending 30th September 2020 due to their purchase of machinery in that period. So as a good practice, ABC can then input this explanation under the findings and evaluation area. So with these 4 steps done, we would have completed step 1 of ASK annual review, and then we can now move on to step 2 of the total 5 steps. Okay, before we move on, shall we go for a 5 minutes break?
Yvonne, do you see that to remove the reverse charge from the numbers before we compute the TPTS ratio?
Sorry, you're asking, did I mention that, is it?
Yeah.
Yes.
Okay, thanks.
Yeah, so we will stop here. Jocelyn, we will go for a 5 minutes break before I come back again.
Okay, sure.
Thank you.
Thank you.